Welcome back to Midcap Radar. Well, all eyes are on the big LG Electronics IPO slated this month. My colleagues Manglam Malu and Shilpa Ranipeta caught up with LG Electronics India Chief Sales Officer Sanjay Chitkara and Chief Accounts Officer Atul Khanna and began by asking them about the rationale behind the timing of the IPO.
See, Diwali is a very important and it's a big season for our industry, and where consumer sentiments are high and our sellouts are very good. So I think that's a right time for this IPO. And talking about our parents, I think it hardly matters where the parents are. Today our focus should be how the Indian subsidiary is doing their business and how they are growing and reinvesting in the market. I think the focus should be on that. And in that sense, LG is creating a benchmark. See, we came in India 28 years ago. And at that time, very few global players could able to recognize the long-term growth potential of India when we started our business. And from last 28 years, we have been working very hard to make consumers' lives good. And I think this IPO is a new future journey for us.
So we've had a lot of MNCs on record say that they're looking to cash out on their India chips to be able to reinvest in their own business back home. I just wanted to understand how that money will be utilized by them, because no money is coming into the company. It's an OFS.
So it's a, you rightly mentioned, it's a OFS where 15% equity parents are liquidating. And as I have mentioned, LG, we are reinvesting here in India. We are coming up with our third plant. It's in Sri City, Andhra Pradesh, where our $600 million US dollar investment we are doing. And this is not only a conceptual stage. We have already done the groundbreaking ceremony in the month of May. The construction has started, and our plan is that by end of next year, sometime just near to Diwali, we start production there in our first line. And there will be a phase-wise investment. And by 2029, we'll finish this project. Notably, this plant is much bigger than our existing two plants. In size-wise, it would be roughly 3 times bigger. And we are doubling up our capacities. We are investing in new products, new technologies. We are also investing to improve the retail infrastructure in Tier 2, Tier 3 town, introduction of many new products. We are also scaling up our B2B business. That's our focus area. That is the HVAC, information display panels, e-blackboards. So a lot of exciting things are going on in LG these days.
Your financials are much ahead of your listed peers, whether it's even your return on net worth, even your PAT margin is much better than the industry. So on the face of it, it does look like the IPO is very conservatively priced. What is the sort of rationale behind this, conservative valuation that you're looking at? Is it that you're looking at leaving more value on the table for investors?
So you are very much right that any IPO of any company would be depend on market sentiments as well as the strong fundamentals. Our fundamentals are very strong, and it has the IPO price band is being consistently directed and guided by our BRLMs, banking partners, and we are following their guidance and making it a room for our investors also to take some portion of that money into their own hands. So that is a very positive move. And we cannot call it as exactly the very lower times in terms of conservative. But yes, it is, I will say, optimally priced in terms of market sentiments as well as our banker guidance.
Let's talk about your numbers. Sales over the last 3 years have compounded at around 11%. Your margins have seen an improvement. So EBITDA has compounded at over 25 to 28%. Do you believe that these are numbers that can sustain going forward, or will you accelerate the growth, pace of growth?
Let's not forget that we are serving to a structurally massive growing economy.
Right.
It's a 41 billion TAM for our products. If I leave aside the mobile phone business, and it's going with a 14% CAGR growth as per that year report, and it will become 73 billion US dollar market for us. And premiumization is happening. Currently, the India is sitting at a level of say around 17% as per that year report, and it will grow up to 25-27%. And LG has very strongly positioned itself as a very premium brand in India. So we believe that we will be the biggest beneficiary of this premium drive. And let's not forget that the penetration rate of our products in India is very low. A product like microwave, just 4% of household have, and air conditioner just 11%, a washing machine 21%. If we compare the other major economies like China or USA, they are sitting at 80-90% level.
So will you grow faster than the projected market growth?
Definitely. Being a sales leader, my intention is to...
That's your intention. Next to you is the accounts leader as well.
Our endeavor is always to expand our margins, and there are some reasons behind that we are expanding. We are doing a lot of investments into structuring our Indian, I would say, local insights, as well as local sourcing, reducing the dependency on overseas buying. We are procuring almost 54% of the components and sub-assemblies in-house.
Right.
As well as our key endeavor is to all produce key components, heart of the product, in our in-house factories.
So we have just a minute to wrap this. So we'll, just do a quick fire here. You have to answer in as little words and as quickly as possible, all right? Which one do you believe will be the category that will grow the fastest in your overall portfolio?
Air conditioners.
Air conditioners. Which will be the margin driver for the business in the next 3 years?
Or B2B businesses.
How much will that account for in your overall sales?
Currently it is around 8%, but it will definitely, the contribution will go up.
And services as a proportion of your sales are how
2%.
much? How much will that grow to?
It is definitely 70-80% it will grow.
One new category that you probably are looking to enter that you're not already present in.
See, it's a competition sensitive information. I cannot disclose right now, but there are plans are going on.
One category which you don't believe is ripe for you to enter?
I don't think so, any category.
You shut your mobiles business, so one thought that,
See, that was a not a local decision. We did this in year 2021. And because we wanted to focus on where our strengths are there, that is appliances and TV, and we want to optimize our resources and investments.
A competitor that you are constantly keeping an eye out on?
Our last year performance.
That's a good one.
All right, that's the big upcoming IPO. We'll be watching out for that one. But for that, we'll slip into a short break. When we come back, we'll get into more stock-specific news and the market action as well.